Hey miners, welcome back to the channel. McNallie Money, the official home of power mining analysis. In today's episode, we've welcomed back Sam Tabar to the program. He's the CEO of Digital, and Anthony and I could not be more excited to hear about this organization's updates. There's been so much going on, so many press releases over the holiday break, and we're really just scratching the surface of what's to come in 2025. Before we get into that, take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below what you think of these recent press releases from Digital, your outlook moving into 2025, and if you're currently holding shares. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Today's interview, Sam Tabar, CEO of Digital. This is a very exciting one, Anthony, as there has been a plethora of press releases and news over the holiday break. Sam, you've been sending out some tweets on X saying your team has been very busy, and boy, is that evident. So thank you so much for making the time, and Happy New Year. Welcome back to the show.
Thank you for having me.
Of course. So we have a laundry list to get through today. Before we do, though, we want to focus on some of the highlights from 2024. This was obviously a pivotal year for Bitcoin as an industry, for HPC, for AI, and also for your team at Digital. Can you walk us through some of the key highlights from 2024?
Well, it's really about the launch of the HPC business. We started our GPU contract in late January last year, having previously had no direct experience in the HPC business, and we ended up launching, I think, the largest one in the industry at the moment. We scaled the business throughout the year. We added new clients like Boostedroids and others. The other main breakthrough is on the team building side. We built a world-class GPU cloud company through external hiring. We added a CTO who's building very exciting technology. More to come on that. A head of revenue with his team and other key team members, all who have direct experience in building a GPU cloud company, basically a neocloud. We finally solved a major gap in our strategic portfolio through the Enovum transaction. Gaining this data center platform and their pipeline was a huge development for us. Beyond the synergies with our own GPU cloud business, the Enovum team is a major asset for us. They're basically a incredible secret sauce. I think that there's a big misconception in the industry that anyone could just go out and build a turnkey tier 3 data center so long as you have the power. That's just not true. This is an exceptionally difficult business with extreme domain knowledge requirements, and we were able to solve for that by acquiring the Enovum team.
In terms of those key updates that Bryce was mentioning since November, what are those key updates that you'd like to highlight?
Well, since the last time I spoke with you, we acquired the real estate and building for a 5 megawatt tier 3 data center expansion in Montreal, otherwise known as Montreal 2. We have executed an MSA with DNA Fund, which provides for 576 H200 GPUs over a 2-year term. We've transitioned from a foreign private issuer to domestic filer status, which I think is very important because it allows for institutions who have previously experienced friction to invest or even barred from investing into foreign private issuers. So we solved for that. We've lubricated the wheels for institutions to take a look at us as a domestic filer and to invest accordingly. So we removed that roadblock that a lot of foreign private issuers experience.
That's great. And we'll come back to that a little bit later in the presentation, but we wanted to get into the HPC AI news because, as Anthony says, you've had a number of big press releases just in the last few weeks, not only on the location of the data center, the expansion, but also this MSA. So you just mentioned the 2-year master service agreement with AI Compute. That represents, I believe, 20 $6.2 million over the 2 years. We wanted to ask Sam, does that, similar to your other contracts, offer opportunity to upsize or extend that contract?
Oh, absolutely. All contracts have the opportunity to expand. The deal is for 576 H200 GPUs as of today. That will be co-located in Iceland. We are sourcing the GPUs from a larger GPU order that we previously placed. The deployment is underway and will soon enter the testing and optimization phases, with revenue generating shortly thereafter. There isn't necessarily a contractual expansion clause, but we would like to think that all our clients are happy with our services and will want expansion after after they experience our services. We always seek out clients that have potential to grow. Our aim is to be a part of that growth by delivering best-in-class services with our existing contracts.
Now, in terms of 2024, when we spoke to you early in 2024, and you delivered that first big contract there, the 50 million contract that was upsized from 35 million, and you were the first real Bitcoin miner to have a significant HPC deal on the books, and is still probably got the largest HPC revenue contracts as we speak at the moment, although we know some peer miners are going to start delivering some revenues in 2025. But you did have a target, an ambitious target of 100 million by the end of the year. Can you tell us sort of like how you're progressing towards that target with your original clients, and how these other deals that you're making over this last few weeks are enhancing that potential to get there?
Sure. I can't comment on what our current being January, revenue run rate is, but I can say it's not quite $100 million yet, but it's higher than it was in December. We did say that we expect to achieve 100. We did disclose that we will achieve $100 million in early 2025. So we did push that forward to achieving that. We do regret not hitting the target within the original mandate by the end of last year, but it was deliberate. Growing a business requires investment, and we were not comfortable with the risk in certain situations. We're very, very returns driven. We passed on many contracts and that didn't meet our return thresholds, and we missed out on other contracts because we didn't want to take too much inventory risk on GPUs that would soon, become older generation with the Blackwells that are coming out this year. And that's really key. GPU cloud is a very, very lumpy business. We were close to a number of deals that we would have gotten, and that could have gotten to our target, but some of them didn't work out because we were not willing to chase on price, and others because we wanted longer term contracts, and others simply because we didn't have the inventory. So I do think if we didn't acquire Enovum, and the funding Enovum has funding requirements for the data center build out. And so I think we would have been much more aggressive on procuring GPUs that could have been put to work last year. But we have a capital allocation dynamic with the data center business and with the cloud business, and you have to feed both very hungry children. So the fact is that we wanted to reserve enough capital to pursue our megawatt build out, which, as you see, just last week we announced a new one. Having multiple options for capital investment decisions is a problem, but it's a very nice problem to have. Most people in our sector only have one lever, that's Bitcoin mining. We have a number of different levers, and this is a true champagne problem. We don't want to provide our 2025 target yet because we think would be disingenuous, having not achieved our 2024 target. So we will announce our 2025 target once we achieve our 2024 target, which hopefully will be sometime in Q1. But we are aiming big in 2025. And we can tell you that we are targeting very substantial revenue growth, especially with the Blackwells that are coming out.
I mean, it's great to see that these you got the H200s coming into Iceland for this latest contract. You had H100s in there before. Is there some now customers requiring H200s, or do you feel that H100s are still fit for purpose in the industry? I mean, we always looking at self-mining, analogies, but we're not as educated in the HPC GPU side of things.
Well, we're still seeing demand for H100s. Absolutely. The market has gravitated towards H200s, so that's natural in the chip upgrade cycle. Soon the market will be centered around B200s and GB200s. There's going to be a heavy demand for that. We're already seeing that. It's all supply and demand driven, and the demand for the most efficient machines is always going to be the greatest. But there's always a price for that, and so the demand will be less for efficient miners. Sorry, not miners, machines. And by the way, it's not very dissimilar to the ASIC market. When Bitmain produces a new and more efficient miner, the market for the previous generation always drops. Same thing. H100s remain a workhorse, though. There's still a market for H100s, so there's still a market for A100s.
Yeah.
So H100s are definitely still sought after and will be for some time.
Makes sense. Now, one question I actually put on the list here, Sam, we saw in the Bitcoin mining side of things, really this division between asset light and vertical integration, whether or not companies wanted to own data centers. As soon as you started expanding into HPC, I can remember even a few interviews ago, you had said you really want this vertical integration. You want to own your data centers. Now you've actually done that and that's come to fruition. So my question is, why the difference between the two sides of the house here? Why is it so important to own these facilities? And as you've brought up a number of times on social media, the location of these, why is that so important?
Sure. I mean, I think in general, HPC appeals to us from a growth capital perspective. We like being able to forecast our returns with some degree of precision, which you can do with HPC. You can't forecast responsibly in Bitcoin mining. Nobody knows where the price of Bitcoin is going to be even in 1 hour from now. So, we like the idea of owning a tier three data center better than a mining site. We like the HPC co-location business better than the mining co-location business. Again, it's for the reasons that the margins are fantastic, or fat, as I once said it. It seems to have stuck on social media. And I can predict them by the penny every month, which is not something I can do with Bitcoin mining. So we like the risk reward. We like the assets of tier three data centers. Those are worth way more than Bitcoin mining operations. And we also saw the way our GPU business was growing and the tightness in the tier three data center market. So we knew we had to have our own sites to provide for future growth. The demand for tier three data center is incredible. It's just really important to be vertically integrated if you want to be in this business with respect to HPC. But with respect to Bitcoin mining, look, we still have a Bitcoin mining fleet. It's mostly in the United States. And we continue to optimize that fleet for better efficiency. But I don't think new investors are interested in Bit Digital for our Bitcoin mining business. I think the algos in the market, they ping BTBT around as a Bitcoin miner. And these algos don't capture the growth part of our business, the fantastic part of our business and our company. They're just looking at the mining sector, the mining business, which makes no sense because we have these vast revenues coming on from non-related Bitcoin mining operations. And I think, and I know it eventually with time that's going to burn off and people are going to catch on that we have this massive HPC business and we own our own tier three data centers and we have a pipeline and we're doing what we said we would do, which was to execute on that pipeline. And we're executing, acquiring all these data centers. We have a pipeline that we've already identified and we're going for it.
In terms of, we'll come on to the mining in a short while, but just staying on track with the HPC, these tier three data centers.
Yeah.
You've been obviously going out there and purchasing the relevant GPUs. Is there a point in time where you would consider hosting GPUs belonging to
Sure.
a customer?
Well, absolutely. I mean, the Enovum, the first data center that we acquired with Enovum, there's more than a dozen co-location customers in there already. We have about 20 customers now in total. I don't think other Bitcoin miners have 20 customers.
No,
No.
no. I mean, it was noticeable on the December update, which came out earlier today, that your HPC revenues are vastly significant now compared to the actual Bitcoin mining revenues. But it was more of a question on something like on new facilities. Does the model the model works good in both types of strategies?
It does, but for the acquisition we just made now, I don't know if you saw the pictures. I think we posted some of them on Twitter, but this facility that we got was a former pharmaceutical facility. It looks like a spaceship. It's giant. It'll blow your mind when you come visit. That is a facility that we will put probably our cloud business in just to even increase the margins of our cloud business. That'll be our flagship
Yeah.
facility. We're really happy with that. And I should mention we are actually beat a hyperscaler on the bid for that facility. And the reason why we're able to beat a very well-known hyperscaler, maybe it starts with A, I don't know, is because we were fast. We were able to get our bid, and the seller, which was a public company, had to close its books and get a sale done before the end of the year. So that's why we were working throughout the holidays to get this done, because the other hyperscaler would take months to get to where we were able to get to in weeks. And that's one of the advantages of being a smaller, more nimble player, is that we're able to snatch opportunities from under the noses of hyperscalers, because sometimes people are selling for a lesser amount if they can get it off their books for certain technical reasons. So we were
Sure.
able to take advantage of that. In fact, we bought that site for less than it was purchased a few years ago. And this information, if people dig, you could actually find it. So we got a really great deal.
That's awesome. Yeah, you talk about the agility of some of these smaller businesses. And one thing that's always stuck with me, Sam, you're actually the only CEO to bring it up. But one of the key advantages of the smaller players versus the hyperscalers that you mentioned is a lot of times these companies working on the LLMs or these large models are actually in competition with these hyperscalers and may
Right.
not want to give out any of their trade secrets. So I always think that was an interesting angle. Now, the other thing that was interesting, and maybe this was foresight, I'm not sure, but a great timing for you guys. In Canada here, you're operating in Montreal. Our Prime Minister Trudeau just resigned. There was a lot of restriction on Bitcoin mining on data centers. Now you guys have these awesome locations in Canada, great latency, or located next to Montreal, which is one of our biggest urban centers.
I'm in Montreal today. That's
Yeah, yeah, you mentioned I used to go out
yeah,
there for work quite a bit too. Great food,
pretty
great city all
great
around.
food. Also very cold, which is one of the reasons why I'm wearing this coat.
Also very cold and a lot of potholes too, I remember there.
Yeah.
But anyways, my question is now with the changing political landscape, the fact that you just acquired more land to expand this Montreal site, can you talk to us about what that looks like in this very exciting market?
We're looking for future expansion in the United States and Canada. We've identified we have a pipeline of think of around 388 megawatts that was announced a few months ago. That pipeline is real. We just actioned one last week, and we'll continue to action them. And you'll see the announcements in the near term future about the acquisitions that we're making to execute on that 388 megawatt pipeline that we talked about. That pipeline is real. It wasn't made for sexy headline reasons. It's real, and we're executing on it. And that is geographically, to answer your question more directly, in Canada, in Quebec, all the way to the west coast of Canada, and from in British Columbia to many states in the United States.
Great.
Moving over to sort of the mining side of the business, and you've
Mhm.
just articulated about how BitDigital's been perceived in recent months, still as a miner, but now we're seeing that revenues expand in the HPC side. Maybe we've due time to give you some credibility for that. But let's focus on the self-mining for December.
And if we're not giving credibility, we will, we will spin off the company. Which I think I think people, if they think about it, it's actually really rational, and no one really loses out because if we were to do that, the spin out, people will get pro rata shares of the spin out. And in RemainCo, we could do something very special. It could be a much more pure play, MicroStrategy of Ethereum play. There are other ideas that we're cooking that, if we were to do a spin out, if the capital markets does not give proper valuation to Bit Digital as a result of our HPC business, there are other ideas that we have that would really unleash the valuation of both companies.
Yeah. So from a self-mining aspect, there's a couple of notable things. Obviously, the level of Bitcoin had reduced. We know there was some difficulty for all miners in December. Difficulty increased during the month again, as it has done for pretty much every month during 2024. But your reduction in Bitcoin mined was close to 30% based on what you delivered in November. And November's a shorter month than December. So can you tell us about, in terms of there was some sales of S19s or some purchases as well. Tell us about in terms of from a mining perspective, it looks like you're doing some upgrading, getting rid of less efficient miners. But in your words, tell us what happened in December.
Yeah, our hash rate did decrease to 1.8 as a result of the exit process from the coinment facilities. Miners are in process right now of being redeployed to other sites, so it's a blip. In the process of finalizing new hosting contracts and additional purchase orders of S21s. So that is, nothing is a straight line when you're redeploying some of your fleet here and there. We're still expecting to return to around 3 exahash during the first quarter, and we expect our fleet efficiency to improve by around 25% to the low 20 joules so per terahash. So I think that's competitive. And so the people are maybe overreading the blip in our monthly report. There's just some redeployment going on, and our fleet will be more efficient.
Yeah. I mean, obviously, it was just noticeable in the fact that, in terms of revenue, that's about 3 million revenue in self-mining, but your HPC revenue plus Boostedroid was getting closer to, I think, 4.8 million a month. So that was a change. And remember, we started speaking last year when they were getting on parity actually at one point. I think it was like 4.5 million each in parity. But now we're seeing, the HPC revenues taking off, and we'll see that carry on there. But it was just a question about. You didn't seem as optimistic on the Bitcoin mining side in previous podcasts than last year. It looked like you were putting more energy into the HPC, and why not when you look at the results that you brought out in Q3 for your HPC revenues and the margins achieving that service there. Are you still of the? Are you? I mean, when your results came out, I mean, the Bitcoin price was 60,000. Now it's in the 90,000s, even though we've had a blip today and it's been volatile today, as low as 92, back up to 94.5 when we started this conversation. But you talked about this Bitcoin price having to get to 130,000 before you'd start the conversation would start around Bitcoin mining. With everything that's happening in 2025 now in globally and all the positivity that came out from Nashville, the inauguration of the president in a couple of weeks' time. Do you still feel there's BitDish can do something in the Bitcoin mining space?
Look, if you had told me that Bitcoin would eclipse 130,000 and the network hash rate would remain constant for a few years, if you can guarantee that to me, we would change our strategy.
Yeah.
But we both know that the hash rate will not remain constant for a few years, and it's very difficult to predict where Bitcoin's going to be. So it's not just a question of Bitcoin going up, but it's a question of the other half of the equation, which is hash rate difficulty. And even if Bitcoin goes up to 200,000 or even a million, if your hash rate is going up exponentially, then you're kind of running in the same place. I'm not sure everybody understands that. And that's one of the reasons why, I'm a huge believer in Bitcoin as a technology. We have a fleet, we're optimizing that fleet, but we're investing our capital in the HPC business. We're buying tier three data centers, we're buying the real estate of those tier three data centers. We have a neo cloud business that's growing exponentially. So it makes sense to put capital in the data center and cloud business, and just to continue the Bitcoin mining business and keep that going sideways because you want to have like a call option on it in case Bitcoin goes up and the hash rate stays steady. That would be the ideal situation. But the hash rate does not stay steady. And when Bitcoin goes up, if you see the hash rate going up, it's like one minus one. And so it's a little bit it's a difficult business, although, I know I'm speaking to a Bitcoin mining sector crowd, and Bit Digital was a pure play Bitcoin miner once upon a time. But you can't like stick your head in the sand about it sometimes. You have to look at reality sometimes and understand this business is very difficult. Bitcoin mining is very difficult. And it's an arms race with no moat. The only moat is capital, and anybody can get a lot of capital. And eventually, Bitcoin mining companies, if Bitcoin goes up to 500,000 or 1 million, then sovereigns are going to want to do their own Bitcoin mining. And when that happens, it's going to be very difficult for Bitcoin miners because you can't compete with a country. Countries have free power. It's kind of difficult to compete with that. And the hash rate will go up exponentially when countries get involved, and there's a national reserve, which I think will happen once the U.S. has their own Federal Reserve of Bitcoin. You're going to have a bunch of other countries doing the same. They're going to have Bitcoin mining facilities. They're going to mine their Bitcoin. The hash rate is going to go up exponentially, and I don't think any Bitcoin miner, including the largest ones in the sector, can compete against sovereigns that have free sources of power. I know that's a bitter thing to say, and I understand the audience I'm talking to. I'm probably receiving digital tomatoes as I speak right now.
Well, I mean, you can't underestimate the impact of difficulty. And if you think about, we had a halving in 2024,
Right.
the impact of the difficulty is effectively like a second halving.
Yeah.
If you think about what mining companies were mining in January 2024 and what they were mining in December 2024, and some of these companies have grown significant hash rate and they were mining less in December than they were in January.
Right.
It does makes it interesting. A point I'd like to sort of raise there is you're the sort of like the third CEO in as many days who's basically saying, they're now focusing on HPC rather than the mining sector, and we're not talking about small mining companies here. We're talking about some of the biggest.
I was the first one to say that, and it was blasphemous, but now the others are saying it.
Yeah, no, that I think there's a few coming out with it, and it probably goes back to I think it was a point that Fred Teal from Marathon made last year, and he also made it a couple of years ago when we started the bear cycle to say that in the future he expected there only to be about 6 or 7 big miners in the space really, because like you say, unless you can grow quicker than the hash rate growth, you're being left behind effectively. And that's the challenge. And it costs a lot of money. You're right, and there's no predictability with Bitcoin price. It could get to 250,000 by the end of the year, but between now and the end of the year, it's going to be volatile during that period. And also, miners have got to make the best of that. They've got to grow during that period. They've got to make, their fleets more efficient. They've got to seek that cheap power as well. Who knows what the power variables are going to be? They've been very kind in this last 6 months. Will they be kind going into 2025? Does weather impact it? As much as it did in previous cycles.
And let's say, for example, the UAE or Canada or one of these countries with abundant resources and power, hydro or
Africa.
yeah. What if they start their own Bitcoin mining facilities? Their cost of power is zero. So
Yeah.
so I mean, what are the large NASDAQ company is going to, you can't compete against that. And the hash rate will just go skyrocket to who knows what. I'm not against Bitcoin. I'm
You're
one of,
highlighting the potential.
yeah, there's just some, it's just irresponsible to,
No, I think it's fair, Sam, and you bring up a good point. The HPC, we've seen so many in this industry gravitate towards for the benefits we've talked about, but you still get that Bitcoin, Ethereum exposure. And the
yeah,
point you bring up about, yeah, Bitcoin may spike to 200 or $250,000 this year, but these HPC contracts, they're multi-year contracts.
multi-year, like up
You
to
need,
5 years,
yeah, you need
great
Bitcoin.
margins.
Exactly.
But any CEO should be fired by the board if if he doesn't take that seriously.
No, that's fair. Yeah, we've talked about that a lot, that inflection point, and I just wanted to point out it doesn't matter if Bitcoin spikes above 130 for a week. It needs to be an extended duration up there. So, no, I think those are great observations or comments there, Sam.
So with regard, I mean, you obviously you've got some ambitious plans in 2025, and you had a fantastic year growing the HPC business in 2024. In terms of funding, obviously in the HPC space now, you've probably got more levers available to you than you had as a Bitcoin mining predominant business. Um, what sort of funding do you still require to meet your strategy for 2025? You've got probably one of the best balance sheets out there as a miner at the moment. I think there's no doubt on the last balance sheet. I know you are probably taking on a bit of debt now with some of the recent transactions. But talk us about what funding your requirements and what levers are available to you, and have been available to a number of your peer miners in the last sort of 6 months.
Yeah, currently we have 260 million in liquidity. 99 million of that is cash. And that decreased, by the way, that decreased 50 million because we
Yeah.
bought Montreal 2 last week. And we purchased about 1,040 H200s for about 30 million. Our GPU cloud revenue is 4.5 million, as you know. We got some money from Boostedroid that's finally starting, 530,000 from Enovum, so about 5.2 million total. Our run rate will grow as a result of our DNA fund contract. So we have great revenues and we have a great liquidity position. And we're looking also to get a mortgage on the facilities, on the tier 3 facilities that we have. And that's another reason why we like this strategy, because try to get a mortgage in the single digits for a Bitcoin mining facility. It'll never happen. But try to get a mortgage on a tier 3 data center with co-location clients with locked up multi-year contract. You'll have the most conservative banks swarm all over you and throwing you mortgage products for, single digit interest rates. That's another reason why it makes a lot of sense to go into this business and why we wanted to get vertically integrated in the HPC space, because the institutions are very eager to finance tier 3 data centers. They're not eager to give us a mortgage on a Bitcoin mining facility. And so that'll help us with our growth plans. You buy the facility with our balance sheet, and then you apply for a mortgage, and you pull that money out, the equity out. There are lots of things you can do to be judicious on your financing, and we don't want to use, the ATM at the end of the day, and that's why we want to get these tier 3 data centers under our portfolio, so we could just finance that through debt. Debt makes a lot of sense for tier 3 data centers. Debt does not make sense for Bitcoin mining facilities because you cannot model the cash flows, the future cash flows. That's suicide. And the people who did take on debt in the last bull run for Bitcoin mining are bankrupt.
I was going to
Well,
say,
some of them certainly are, yeah. I mean, Sam, you mentioned about the treasury position at the moment with your Ethereum, your Bitcoin, and your cash position there. I'm looking at your current enterprise value,
Yeah.
less your hodl, and it's at $237 million. Now, even if I just look at the December update, you've got 60 million annualized HPC revenue coming in. Your Bitcoin mining revenue is 40 million. That's 100 million in simple terms without doing anything else.
Right.
I'm just sort of like, shocked at the fact that
We are
people
too.
aren't sort of picking up on this.
We
It's
are
really,
too. And it's because the algos are just looking at the Bitcoin mining business. The algos are not putting in the HPC numbers and the algos. If they did, obviously it would be a very different number for our stock price. But we're just being pinged around by these Bitcoin mining algos, and they're just looking at this small Bitcoin mining business that we have. Eventually, that will go away, and if it
yeah,
doesn't, we'll take
it
a
has to.
sledgehammer. We'll take a sledgehammer and split the companies. It's either it goes away with time, or I split the company. One way or another, these algos will be taught a lesson.
Yeah, I mean, you're indicating, you want to grow to 3x hash this year, which will bring in, heading on towards double the amount of mining revenues, and then, increasing the HPC target, you're saying by maybe the end of Q1 can get to that 100 million. And then you're talking about a big 2025. Something's got to change in that period there. We've got to get that message across there. Yeah, it was just a point I just thought to mention because I've got the tables up in front of me, and I'm sort of scratching my head really as to understand why. Because even if you started to think about P/E ratios, it's sort of like
There is
ridiculous.
no metric you can use where our valuation makes sense. There's absolutely
Yeah.
no business school metric that you can use where the valuation makes sense.
No.
Yeah.
And I mean, obviously, we're looking forward to the next quarter, not just for Bit Digital, but for every miner, because you're going to have yes, you've got your predictable HPC revenues, but the fact that the final quarter of 2024 will have Bitcoin in their accounts at $93,000 a Bitcoin, as opposed to $60,000 on the previous quarter. That's a nice uplift, and that helps you guys out, especially the fact you've got a nice hodl to go with it as well.
Yep,
Most
indeed.
definitely. Hey, so just a couple kind of variety hour questions for you here now, Sam. The first one, this has been posed on X a number of times. I saw Matt Schultz just address this as well. Many people have asked if you feel like your company share price is depressed or not being fairly valued, why don't you just go purchase shares yourself on the open market?
Because I don't want to go to jail. Because I don't want to go to jail. I'm privy to information that I know, at least in theory, will affect the stock price. And so if I buy my stock, being privy to that information, I'll go to jail. So that's why I'm not buying the stock. However, I can say that I'm very aligned with shareholders. The majority of my net worth is in BTBT shares. I have not sold a share since I joined the company, and not one single one. If I sell some shares, it would be because I'm trying to buy a home for my upcoming new family. But at the end of the day, I have very high conviction. I'm very aligned with shareholders, and any pain or joy that shareholders experience as a result of the stock going up or down, I experience it 10x more because, again, I have a lot of my net worth tied to this ticker. But I will say that I cannot buy the shares. They can only be awarded to me because I have insider information.
Makes sense.
So in terms of one of the most recent updates that we were pleased to see, and a number of miners in a similar position are looking to follow your lead here, is redomiciling in the US. I think effective from the 1st of January. So can you talk us through the process of that? Is it a costly process to go through? But mainly, what about the benefits that you're going to achieve by actually going through that?
Well, first of all, it's much more of a pain in the butt to be a domestic issuer because the filing requirements and the reporting requirements and the transparency requirements and so on, the operational complexity is much higher than being just a foreign private issuer. As a foreign private issuer, you don't have to offer that much transparency. The rules are much more lax, and I can understand why a lot of foreign companies want to stay that way because they get to enjoy the capital markets in the United States while not necessarily offering too much transparency or dealing with the reporting requirements. So, to me, that's sort of having your cake and eat it too. I don't think that's right. Shareholders should get all the transparency that they can. They're putting their hard-earned money in the ticker. They are owed all the information that we can give them and more. And the way we prepared for that is that for a couple of quarters, we just acted and behaved like we were a domestic filer. We basically did everything but the title. So we beefed up our operations and our compliance, and we just filed as we were a domestic issuer, all the information as a domestic issuer, behaving like we're a domestic issuer. And after a couple of quarters, our team was confident that we could just do this officially because we've been behaving that way anyway. And now we are officially a domestic filer, and that's wonderful for the capital markets because now institutions can take a look at us, institutions that were not able or it was difficult to invest in a foreign issuer. They have a much easier time to consider companies that are domestic filers, and now we are one. And, comparing and contrasting domestic filers to other domestic filers is much easier because the formatting is the same. The formatting when you're a foreign issuer is not the same when you're comparing it to a domestic filer. It's pretty different. And it just causes friction. It causes a headache for the analysts and the shareholders to compare and contrast. So we got rid of that. So less friction, more shareholders, at least in theory. And that's why we decided to do it, and that's the process.
That's it. I mean, to be honest, I'm glad you've mentioned that part there about the formatting of the accounts. As a chartered accountant myself, it was always a bit more challenging to go through
Yeah,
yours because it was like, you need a magnifying glass to look at the right font size.
right,
It is, and then you look at some of the ones and you can go straight through it.
right.
I'm having to use this, the search engines to find, the data. But one thing I will say is everything was in there. Everything
Yeah,
was in there.
everything
I
was in
never had
there,
to come to Bit Digital and say, can you provide this, this, and this? And believe you
all
me,
in there.
there are a number of miners I go every quarterly reporting and saying, why haven't you done this? Why haven't you done that? What's this figure here? Some basic stuff that you'd expect, in every account set. So I thank you for following that route there, and hopefully with this.
And by the way, I got that idea from I mean, a lot of institutional investors mentioned it, but the most noisiest crowd was the retail guys. And everything I read
Yeah.
on X, people on X I noticed were clamoring for one of our peers to be a domestic filer, and I was like, you know what, we could do that. And
Yeah, we've been asking on the podcast to all miners, the non-US miners for probably about last 8 or 9 months about, it's quite a regular question. But you're right, and the thing is, I think we've talked about this before with regards to the retail investors and especially those on social media, because you've given them food every month in terms of the updates you're providing. And look at your update month by month now. It's getting like War and Peace in terms of there's no one can ask any questions because it's all there.
yeah,
You're one of the few companies that actually starts putting in all your revenue updates. I
yeah,
could probably do your quarter 4 reporting, pretty much without seeing
that's
I
fine.
could make I'm a management accountant, so cost account is my
Yeah,
specialty. I
yeah,
could do the cost fairly straightforward, but I've got all your revenues down to like to a cent probably because you tell us about them every month. There's no
yeah.
hidden factor there.
There's nothing
So I do
hidden, fully
applaud
transparent.
Bit Digital on that particular point there as well. So no, thanks for giving us the update on that, and that's really useful. Looking forward to the next quarter reporting coming out where I
Me
can
too.
start viewing in a more easier manner.
Me too. This year is going to be really, I mean, last year was the start of a process to transform and to become the company that we should be. And this year, should be our year, especially with everything that's happening in the pipeline, which is one of the reasons why I can't buy my stock.
Definitely. I could probably do your Q4 reports too, Sam. They just wouldn't be correct. So you may want to get Anthony for that one. I'm just excited about the more shareholders, the more eyeballs on the stock, and obviously the interest in the company. So I know we've covered so much today. We really appreciate the time. I know things are very busy at Bit Digital. You've got so many irons in the fire. We wanted to give you the mic one last time to wrap up. Any closing thoughts? And thank you so much again for the information.
Thank you for having me, guys, and I really appreciate every single shareholder that engages with me, even the haters. I learn from everybody. I read every single comment. I don't comment on every single comment. There are some trolls out there, and there are some people who don't understand, and there are some people who say things that are unfair. But there are some things that are fair, and I'll do whatever it takes to improve the company, to make this company, to make the company as valuable as possible. Because, like everybody who's buying Bit Digital, we all want to get rich. And I'm long-term greedy. I'm greedy, but I'm long-term greedy, and I want us to get there. We're trying to build a very powerful and valuable company, and I think 2025 will be our year.
I agree, and we're buckled up along for the ride. So guys, let us know in the comment section below. Are you currently holding shares of Bit Digital? What do you think of these recent press releases and your outlook for 2025? Sam, thanks again. We'll see you back here tomorrow.